Well. Looky here. Here you are, here with me, trying to get some more thoughts for your yacht. Listen, guys, what a beautiful time. Today, I don't know if anybody was able to be present watching the FOMC meeting, but just, JPow basically gave conflicting. JPow said something while his face, emotions, his tone said a whole nother thing, which has got the entire market kind of in a little bit of confusion. Obviously, you saw this morning, we ripped out the banjo. Still, mass majority green on all those long-term plays you recommend. The ones that aren't is slightly down after, like I said, a pop up, because you could tell the center market was like, wait a minute. JPow, you were talking to me nice, but you were talking to me nicely, meanly. Whoa, what's going on here? Which obviously we all know, economy didn't just magically fix itself. Like I've been saying, we're in a recession, even though everybody wants to magically think that we're not even everybody, just in Wall Street. And the only reason that is because the tech sector's jumping at the bandizzle. And there's more to come. Like I said, if you want your money protected, your money needs floating in that tech and tech with a little bit of tech so you can eat some tech and tech. Innovation, high price power companies. This is what's going to protect your funds. You can play around and all the rest of this, but right now it's going wicked. But before we do that, guys, let's double tap into a video with our favorite redhead, Miss Liz, over here at the, I guess it's the Claiming Countdown. She's speaking with Peter Schiff, basically giving the overview on his interpretation of what came from the FOMC meeting. Let's get down to it.
Dig into the decision to pause rates and the ramifications for your money and the economy with Euro-Pacific chief economist and Peter Schiff Show podcast host Peter Schiff, along with NatAlliance Securities global fixed income head Andy Brenner. Andy, first to you, your gut reaction to this. He kind of calmed the markets at one point, and then all bets were off.
Liz, he was waffling all over the place as far as Peter was talking about what Powell was saying about labor, and it's really ridiculous. The labor market is softening.
And all that money, but that dandruff popping all off your jacket.
Last week, or 2 weeks ago rather, and he was all over the place. 2 years rallied from 478 high yield to 469. Now, as you just said, back to 472, 473. We really think inflation, we looked at the PPI number this morning, 1.1% year over year. Why doesn't that factoring in any of the Fed's discussions? We're looking at lagging CPI data, but even Powell said that he thinks that the committee thinks it's going to be 3.9% for PCE year over year. I think those numbers are going to end up looking very high. I think they're going to be significantly lower.
I think this is what's shocking. That the numbers that they put out for the projections, which only come, how many times do these projections come out?
Once a quarter.
Once a quarter. We got the brand new ones. They look better and stronger, particularly for GDP. If you look at GDP, previous was 1%,
0.4%.
0.4%. Can we put this up? Because this is extraordinary. They have raised it now to 1% by the end of this year. Then you have for 2024, 1.1%. And now, of course, 1.8% for 2025. So why pause now, Peter?
Well, I think Powell is actually concerned about the evolving.
Y'all, and the thing was, we got a pause today, which obviously sent the markets to the levy at first because, it fed into people's expectations. But what they didn't expect was some fact that, it felt like JPow was having his arm twisted by the Fed to, hey, you go up there and say this now, don't you, don't you come off the board with this. And it was kind of like if you've ever had to apologize to somebody as a kid, I'm sorry that you felt like you hurt, you could clearly tell by his emotion that it was kind of like he was agitated, having to talk on the subject, that it wasn't how he wanted to. Because, mind y'all, JPow said that his whole aim is to stop inflation. Being forced to make a pause, like the Fed made him or whatever, maybe, hey, we don't want to dive too deep in that, get you eliminated. But you could tell that this was not what he wanted to do, which is what the market clearly picked up as well. As you see it, woo-doo, then woo-doo, where people are like, wait a minute. Did y'all see that too?
Financial crisis that has only just gotten started. I think it's going to ultimately exact a heavy toll on the real economy, on the so-called strong labor market. I don't believe that this is a hawkish pause. I mean, Powell admitted that the risks to inflation are still to the upside. He talked about how important it is to get inflation down to 2% and how far away we are from achieving that goal. He's forecasting 2 more rate hikes this year. If that's the case, why skip? Why not raise rates right now? If inflation is still a threat and you know you're behind the curve, raise rates. I think Powell's afraid of what's happening in the economy. He doesn't want to hike rates anymore. He realizes that.
I don't even think that Powell's righteously afraid. I just think that the amount of pressure from big money, Fed, and everybody that we need a pause. Man, mind you, 2 months ago, last month, we need a pause. They gotta to where it's like, okay, yeah, all right, we'll do the pause thing, but it's irrelevant as agitate because, like he said, he's gonna come back and hike the rates again. So why stop now? You know what I mean?
The rate hikes have already been too much for this fragile economy to bear, but he doesn't want to admit that. So he wants to maintain this specter that the Fed's still on course. To me, it's
what he said there. He wants to keep raising rates, but the economy's too fragile. Economy's not in as good shape as what they're trying to predict. So obviously, he's being forced to stop the agenda of trying to catch inflation due to the simple fact that outside entities and outside moving parts cause him to not be able to keep going. He hits another interest rate. This thing, we don't know what leg this could be on. But like I said, you got the SEC attacking crypto. Like they need to stop that from building up. You can kind of tell from the outcries and how the emotions are moving from your government officials that when we're in a recession too, you might want to be aware of what's going on out here.
It's like that mid-course correction from 2019. I knew at that time that it wasn't a course correction, it was a course change, and that is exactly what we've had.
Volatility is dropping. We now have it straddling 14 points. Okay, it's been below that in the past couple of days as well, but down 4% at the moment. So it seems like the market is comfortable with this. But Andy, there was a point where specifically he stressed, and this was not there yet. We're not there yet on tackling and killing inflation. Let's listen to how he put that. And then I need your response on that because, like Peter said, why then pause? Because what you have when you pause is now you're stopped and you've got an inner thing and you've got to get the energy to start it back up again in July if necessary. Here's what Powell said.
Forecasters,
it's runaway inflation.
Fed forecasters have consistently thought that inflation was about to turn down and typically forecasted that it would, and been wrong. So I think if you look at core PCE inflation overall, look at it over the last 6 months, you're just not seeing a lot of progress. It's running at a level over 4.5%, far above our
that
target,
don't sound
and
good.
Not really moving down. We want to see it moving down decisively. That's all. Of course, we are going to get inflation down to 2% over time. We don't want to do, we want to do that with the minimum damage we can to the economy, of course, but we have to get inflation down to 2%, and we will. And we just don't see that yet.
And yet he's pausing. What are our viewers supposed to interpret from that?
First of all, Powell is a dove in wolf's clothing, always has been, always will be. But Peter hit it right on the head. It's the regional banking system. They're in tremendous distress. Sure, it hasn't been in the headline for the...
Guys, all right. Don't get lullaby. Remember what we're in this whole stock market thing for, which basically even what we're tapping with emotional investors. Guys, yeah, we love AMC. We all about AMC, but still also there's real things going on. You need to be setting up protections for yourself. The economy is in bad shape. Mass majority of us know that, but obviously you can see how with media and run-ups and things like that, they can kind of push that to the wayside. Every single video I keep telling them when they're like, well, Leah's yesterday, what recession? We're definitely in a recession. Like, there's no confusion about a recession. The fact that they're we're all good. Oh, hell no. Absolutely not. And we got political strife that's coming in as we move towards elections. Oh, guys, wait for them to unravel. Curtain pool. But in that meantime, you could be placing yourself in one place that are going to protect your money. Tector's kind of, I said Tector. Tech, this is what should be called Tector, his own sector. But tech is kind of departing from the straight wasteland that's occurring on the rest of the market, just on the fact that it has the key factor of what's called innovation. Innovation is the thing that gets you through recessions, gets you over humps. The creation of the model of the next generation is what you can put your money on and invest and ride that train up. But like I said, the banking sector never, guys, you think all that money disappeared? Did everybody already forget about was it SVB? What's that over there? Credit Suisse. You know, we all forgetting about that. Deutsche. You know, guys, that money's gone. People ran out. Part of it got burnt up. That money's gone. They got a leg blown off of the financial sector, and they were able to kind of creep back to the back wall. And people are like, oh, yeah, we did forget about it. Guys, that banking sector still over there with his leg blown off, bleeding. Like, that's not fixed.
Last few weeks, but just look at Treasury bills. If the Fed's going to raise rates further, T-bills are going to be between 5.5% and 6%. Why would anyone in their right mind keep money in bank deposits at 3% or 4% or 1%?
What do you mean 3 or 4? They're still at zero. Bank of America is zero on checking and 5 basis points on savings
Apple Card
account.
isn't. Citi isn't. Capital One isn't. I just
still makes a
put
great
money
point.
into four. Okay, I get that. But you're right about when you look at the short-term T-bills, right? Anything.
You should let that man finish talking about how stupid you are putting your money in bonds instead of in the NASDAQ right now.
1 month, 3 month, we call it the party of 5%. Like 6 of them up until 1 year are all yielding 5+%.
Yeah, absolutely.
Why would that go higher?
And Powell is significantly downplaying the risk in the commercial real estate market. This is a crash already happening in slow motion.
Why are regionals going down?
Well, first of all, they're all going down because why even keep your money in a bank that might fail? They're all insolvent. When they bailed out Silicon Valley Bank and a couple of others, they made it clear that it's a case-by-case basis whether they're going to cover accounts in excess of 500 or the 250 limit. The government has created a run on the regional banks, on the community banks. They are disasters. The only thing that's really propping them up now is the Fed and the government. But also, you know, Powell is significant.
All of these regionals are reverting. They had been in the green. They are now going red. Yesterday on this show, Duke professor Campbell Harvey, who invented the term yield curve inversion, which, by the way, at this point, Charlie Brady, our managing editor,
put in the comments, did y'all forget what's going on out here in the economy? Did anybody forget? I just be honest now. I know, especially if you picking up on these plays in this tech sector, you seeing a little green. Maybe you were being over exaggerated. No, did anybody forget that the economy is still in shambles? I just want to know.
Is saying that the yield curve inversion is the widest in 3 months. It is a huge gap.
You saw that banking sector been getting levied behind your back,
and yet all we see are these so-called points of strength. The Fed is pausing. I mean, this looks, like I said, 50 shades of gray.
The banks are loaded up with low-yielding, long-term debt, whether it's mortgage debt, Treasury debt, and they're losing their deposit base because their depositors are not going to take the risk of the bank failing. They can't get any yield. They can just pull the money out and loan it to the government by buying a money market fund. The Fed created this disaster by keeping interest rates at zero for about 14 years, for running up a $9 trillion balance sheet. If Powell really thought inflation was a big risk, he shouldn't have lit the match.
Andy, do you think JPow, looking at the Fed funds futures, leading up to today, where they got as high as 98% for a pause today,
that was some emotion in there,
influenced by that, and that's why he paused?
I think that was part of it, Liz, but I think he was going to pause regardless. I mean, when he had Jefferson go out there 2 weeks ago and say, we're going to pause, that was it. He had already made the decision, and CPI really wasn't going to change that no matter what the number was. You know, the problem that they have now is Powell had 2 people that were ready to dissent. So that's why he tried to sound hawkish. That's why they did talk about 2 more rate hikes. I think they're done. And one last thing with regional banks. Remember, when you put money in Treasury bills, if you live in a high-tax state, that is non-taxable for state tax, which makes it even more valuable.
Well, they're only done until the market forces their hand, because eventually inflation is going to run out of control and the Fed is going to have to hike. But the one thing that Powell could do that would help is to warn Congress that they got to cut back on this reckless government spending, bring down these deficits. That's one thing that might make a difference.
Okay.
But he cops out. He refuses to go there because he says that, well, fiscal policy is not part of what he does.
Gotcha.
It's exactly what he does because it's the monetization of those massive budget deficits that is the root cause of the inflation that the Fed creates.
Dow Jones Industrials down 269 points. The S&P lower by 5. NASDAQ's holding on to a tiny bit of green, a gain of about 3 points here.
Yeah.
Apple's moving higher. We do have several increases here and up to 52-week highs on the stock market. Let's get to individual names.
Mind you, I wouldn't fall into the old banana and tailpipe trick. People, oh yeah, banks are. I'm going on the bank play. How you doing? Hey, you better get in these high price and power stocks. We doing okay, and we had a run up, and we still hold even the ones that went red. She said tiny bit red. You talking about 20% red if they did. And of course, those are names that like Tesla have been running for the last 13 days.
Andy Brenner, Peter Schiff, great to have you. Thank you so much.
Much love to our little ginger snap there, Leah's. Hey, baby, listen. You're trying to be a sugar mom. You let me know. You just let me know. Now, guys, pulling on in here, taking a quick little look over here. Of course, we're going to double tap over a couple things to make it quick and sweet. My expectation fully was the simple fact that I knew that I didn't actually expect them to come through with a pause. So I was actually shocked about that. But again, this was like a pause that was handled with a side dish of, oh, hell, I didn't want to do this. So basically, it hits just the same as the interest rate. It's almost like you're about to get a whooping, but your mom's like, you know what? Now I'm going to get you tomorrow. Oh, wait a minute. What do you mean tomorrow? What time? When? How? With what? That's basically what we have got going on right now. Is basically a pause sting. But coming back to our AMC plays, we saw a pop off in the morning, of course, a synthetic sell-off pressure that brought us down to keep us stagnant at the same point. We're still holding above that 485. All this movement in between here is irrelevant until I see a pop above that 516. We had one of our family members ask if I believe that we'll end off this week at max pain. In my personal opinion, I do. Max Payne's around $6. But I feel like there was too much that was oversold and created in that first week and a half of coming into June. So like I said, I still feel there's way more additional run up. This hasn't equaled enough volatility or spike enough pressure for me to be like, okay, all right, they released something out of there. Now, how do we know that? Come on through. Let's take a trip down memory lane. Fintel is reporting shortage at 22.62% with 7.22 days to cover. I pulled and I found Ortex data. And, of course, obviously, we have our stock tracker to correlate with this. And this is why I'm like, okay, y'all are holding things, but that fire is still sitting in that chimney. But basically pulling over here, our cost to borrow sitting at cost to borrow average at 266.06%. So cost to borrow is now back up on that run up. Up here they have short interest that was reporting 23.37. So some places like Ortex are showing 23% short interest, which again I believe short interest is 200, 300, 400% with the fact that it's sending all of buy action to the dark pool. And that's how we're standing at that 100% utilization, which is a hard task to do unless there's just some fraud at play. Coming double tapping in, I keep seeing this swing. At one point it was at 150, then it dropped down to 40. Now it's at 50. But there's 50 currently at this point 50,000, and the market's supposed to be closed, mind you, which is just crazy to me how this is just changing. But we already know we're in fraud city when you're in this play, which is why I always recommend 10 to 20% max of your money into swing trades, gambling portfolio where you can hold trades like this, and the rest of your money, and not financial advice, just my personal advice, should be in a long-term investment portfolio, picking up stocks like Tesla, Nvidia, XRP, Ethereum, Bitcoin, Apple, Microsoft, Amazon, AMD, Path, SoFi. Hey, guys, there's a lot of money being made. Squeeze like patterns, of course, we're going to pull that in. But we got 50,000 shares available. And like I said, they're borrowing right now on these shares alone at 100.7%, 108%, 110% with an average of 233%. So cost to borrow is raising up. We're having this difference of seeking between FinTel and Ortex and data reporting. Of course, all this, again, doesn't make sense. If there was going to be this setup, why is there this, of course, glitchy barcoding that's breaking out, that's riding above that 516? This is synthetic sell pressure. I'm not fazed by it. And then, of course, whenever there's a synthetic sell pressure, we have more things that pop out to seem like cost of borrow raising up, short interest raising up. I'm just not folding up under that. But pulling back under these sweet plays, guys, today does mark the official day after a 13-day, what was it? 13 days or 12 or 13 days of running of the Tesla has not opened up and closed green. Of course, you can see how we doing. No, we're not falling off pants. Just a little cool down period. But like I said, guys, you could have been down here last month at $100. Somebody asked, well, is it worth 100, if you could have 100 shares of Tesla, would you even be? Hell yeah, guys. Investing is about the amount of money and the money moving, period. You could have been going towards 3x whatever you had in a heavy duty, high pricing power company. Also, while there's all this FUD going around, while they've got us distracted, and like I said, we go over this multiple times. If all your money is AMC where you can't afford to buy into something else, you don't have other money that you can expend, you need to reallocate and get some of that money so y'all can tap into some of these. Even at these points right now, people are like, oh, 260. Guys, again, I'm a long-term investor with this. This ain't like a tomorrow, this year, next year. I'm talking about 5 to 10 years down the line. Realistically, 10 years, 15 years down the line, right? At $250, just the same as when I saw it at 100 and 150, I was like, oh, hell yeah, I have to load in here. This is still a reasonable spot to buy. Again, not financial advice, but it's just how I'm moving it. Obviously, you could have bought it down here. People are like, oh, it's at 220. Well, now it's at 260, guys. It's about to make that maneuver up to 300. And the FOMO behind AI, EV, and how Tesla's coming as they're selling more EV batteries. We've got all that money that's coming in off of what's going to be coming in revenue with all these people that have adapted their charging standard, using their adapters. Ford, General Motors, Blink Energy. Guys, money. Pulling up over here, our sweet big baby, that big baby. 431 moving. Y'all talking about money, guys. My portfolio jumping at the gym. It's jumping at the gym. I caught it. I said I have to go now. And I'm still buying in these, but like I said, I'm just trying to look at the point. I told y'all when I saw it at 380, I was like, guys, it's not coming back down. What I tell y'all, this is the point we need to buy. What was that? That was last week. All right, here we go. Now we're going to 440, guys. Now you're going to have to make a decision. Damn. Now you're like, well, shit, can I get 400? I told y'all when it was at 380, hey, I bought some more. Here we are, moving up. Guys, tech is going to be the thing to levy and protect your money going through these volatile times. I'm going to keep saying every time. You don't have to listen. It's everybody's opinion. You're the CEO of your LLC, and however you would do it, I respect you nonetheless because you're in the stock market trying to build off of it. The fact that you're trying to get you a thought on the yacht already let me know that, hey, I'm somebody I respect. Just out the gate. But if you do want to take some recommendations, if you like what's going on, hey, this is out here for everybody to enjoy. This is, I'm not just coming out spitting things that I don't understand. Hey, I spent some time kind of investing myself and learning these markets, kind of be able to come out and hit it even harder than when I came in 3 years ago. So like I said, mixing up some sweet entertainment with education, call it edutainment. Edutainment. But nonetheless, guys, much love to y'all. Love all the support. We'll come back in, get ready. I already told you this week was going to be more volatile than the last. And if you think that's something, wait for the week that's coming up. Because like I said, they're going to start dropping that banking sector news off on y'all here soon enough. But nonetheless, hold it down. People, we in this thing. Nothing's changed. We're running that bike. Yes, sir.